banking transactions continue to slow. According to the BankservAfrica Economic Transactions Index, the BETI, there was a fifth consecutive monthly fall in transactions in October, with the BETI registering the lowest index of this year of 130.7 points. That compares with the index high level of 143.3 points just in May of this year. To flesh out the meaning of this data, I'm joined by Elize Kruger. She's an independent economist. Thanks very much for joining us, Elize. So the index has been losing ground over the last 5 months. Perhaps you can explain to our audience what the BETI measures and the significance of this downward trend.
Good afternoon, Nampu. Yes, the BETI measures the total value of economic transactions in the South African economy, both debits and credits. So transactions passing through the bank accounts of households and businesses. So what we have observed in the data over the past couple of months has been a moderation, an ongoing moderation. So less and less value or the growth in the value becomes negative. So although the number of transactions in certain months have been higher, the average value of transactions dropped. So it's really a reflection of what we see is the strain in the economy, difficulty out there on the household side, but also on businesses, with factors such as load shedding, ongoing load shedding, and all sorts of other, factors that has been hampering the economy, filtering through into the actual transaction value that we see passing through the clearinghouse.
Yeah. So you talk about the economic backdrop, that is the local economy, but I suppose things that are happening in the international economy as well are also not helping or don't augur well for South Africa in terms of increasing transactions in the near future.
Absolutely. We are seeing a global slowdown playing out, which is also impacting negatively on the South African economy. And then specifically in October, it's the 5th month of the decline, we've had that crippling Transnet strike. So that has also impacted on economic transactions. So that's also been related, that's on the trade side that has also impacted us negatively. So it's on many different fronts, but what we do see is indeed lesser growth in transactions in the economy.
Yeah. Depending on your perspective, or depending on, the prism through which you view things, people would argue that the Reserve Bank's action to increase interest rates in an environment where the economy is already, on the back foot is a negative thing. But of course, on the other hand, the Reserve Bank says that it needs to deal with inflation, because if it doesn't, the long-term impacts of inflation or, higher inflation will be really negative, particularly for the poorer South African. To what extent, where do you stand on this particular argument? And also, they are going to be having their final meeting in November. What do you anticipate they'll do? What do you think they should do?
Yes, Nambu, that is actually, I would say, a very fine balance between addressing higher inflation and the negative impact that will have on the purchasing power of all South Africans, versus also the negative impact straight away just on the pockets of consumers with debt. So I do think the Reserve Bank will continue to hike. I would hope that the next hike that we should see next week will be the last one in this current upward cycle of interest rates. Now, I do think, they had to address inflation expectations, but if we move closer to a level like 7% on the repo rate, we are back at levels where we were pre-COVID. It will be a level where we're going to see a positive real interest rate in the next sort of 6 months. As inflation tapers down, your real yield will open up. So I do think we are very close to the upper turning point of the interest rate cycle as well. What I do foresee the bank will do is to maybe keep rates unchanged at a high level. So the 7% repo, which I think might be the termination rate, might be effective for, say, a good 12 months or so before we could start to talk about and to think about lower rates. If they do go further, I think we might get cuts earlier. But point I want to make is, yes, we need the medicine to address inflation expectations. But there comes a point, and if I look at retail sales, I already think there are a lot of strain out there on the household side. There comes a point where you need to also take cognizance of the negative impact of higher rates with a lag on the economy. And I think we are close to that.
Yeah. You touched on retail sales. Like you say, the third quarter showed a poor showing indeed. And some people suspect, some economists suspect that we may see a technical recession if the third quarter goes into a negative territory. But just going forward, we have November, typically, you know, your Black Friday, and we also have the festive season coming up. Do you expect an uptick in transactions, not because people suddenly have more money, but perhaps they're borrowing more money and they want to meet the occasion?
Well, I do think we will see higher transactions coming through on like Black Friday. But I think the value of transactions might be lower. I do expect that we will see consumers stocking up on, for instance, you know, much needed items like groceries and personal, you know, products and so on, but not so much the high value, more expensive you know, appliances and more luxury items. So I think it's going to be back to basics in 2022, given the hardship that's out there in terms of household finances, and given the still high levels of inflation. I think households will spend in the next sort of November, December period, but more on necessities than on luxuries.
Elise, thank you very much for your time. Elize Kruger, she's an independent economist.